Hello and welcome to the vol report for Option Pit for August 3rd, 2018. I am Keith Harwood filling in for Mark Sebastian. Reminder, all of this is for educational and information purposes only. Should not be considered investment advice. Options have risk. If you have questions, consult with a financial professional. Wow, guys, we've had quite the move the last 2 days. Yesterday morning, it looked like the world was going to end off of trade rhetoric, and then it turned out that the market just ran out of it. So one thing I want to note here before I even get anything on the VIX is, I look at a 6-month chart of the VIX, and this stuff's about to fall off. So today this day goes. Tomorrow that day will go. Monday, Tuesday, Wednesday. By the end of next week, we're going to lose all that. And if I just go down to a 3-month chart, you can see we've got a much tighter range here. It's really between 10 and 20 now, not this 10 to 50, 45 range that people get concerned about. So I think, the market has a memory. The market may start losing the memory of what happened last February. With trade rhetoric no longer having the impact that it used to have on the market, what's going to get the VIX bid? We're going to take a look at some of that sort of stuff in chat today. You just look today at what's going on in SPX. It's up 3.5 right there. Firming here, trading above yesterday's high. Looks like it really wants to press above the previous high here, and maybe even press back to January highs. So if I go back to January highs, we're talking about 28.75-ish, just a little bit below. And so we're not that far away from that kind of move. If I check the same sort of stuff in tech, tech's already made that kind of move. Apple, of course, has been a big driver of the tech move here. But tech's well above the January highs, and just now, the next all-time high would be a move back above the high from a week ago. So, these markets are very resilient. They're very strong right here. We can talk about Apple, of course, because trillion-dollar company. So what's going on with Apple here? We've got a nice rally here. Now we're starting to consolidate a little bit right around that $1 trillion level. No surprises there. People wanted to get it to $1 trillion. Doesn't mean $1 trillion is the stopping point, though. The analogy I was kind of talking about with some people yesterday is the first time oil hit $100, that wasn't the stopping point. That was just a milestone that got everybody excited on the way to 150. So let's keep in mind that a lot of times these markets, get to a big number, but that's not the stopping point. It's just a stalling point. How are we going to trade that? We'll talk about some of that in chat. One other name that, I wasn't initially planning on talking about, but then with the non-farm payroll number today, it seems like something may be changing here is gold. So you can see gold has been a dog for the last month and a half. Since June 14th, it's basically down from 123 to 115. Pretty major drop there. Dollar's starting to weaken. Gold's starting to bounce back. This may be starting a structural trade. Vol is incredibly low in gold and the miners and silver, like it is across the board. So if that's going to start to create a shift in commodities and in gold, I think there could be some excitement there. All right, folks, lots of stuff going on today. Join us in chat in about an hour and a half, and I look forward to talking to all of you there. Have a great afternoon.